Som Distilleries was up about 20% yesterday, up another 10% or 9.5% in the session today. And it started the year with a bang. Of course, yesterday there was this block deals by Equity Intelligence and Pony Juweliat, which led to the stock doing so well. But that notwithstanding, I think the company's been doing well on the fundamental bit for a while now. One of the key reasons that we hear for the margin expansion that one company has shown and others might show is the coming off of costs of molasses and the positive impact that it has on the operational performances of almost all of these. So let's try and find out the volume picture, the operational picture, and what's the outlook for the next 2 or 3 years for Som Distilleries with the management. Mr. JK Arora, he's Chairman and Managing Director at Som Distilleries and Breweries, joins us right now on the show. For the benefit of our viewers who are tuning in right now, it's a Bhopal-based distiller and brewer. The flagship beer brands include Hunter, Black Fort and Par. And they make beer, they also make, in a small way, Indian-made foreign liquor. Mr. Arora, thank you so much for taking the time out and joining us today. Tell us, Mr. Arora, let's start off with what you've planned any which ways in terms of your business expansion. As we learn that you've set up a new distillery in Karnataka, which will probably have a capacity of 3.5 million cases of beer, 2.8 million cases of Indian-made foreign liquor as well, and operational from Q4. Is that expansion on track, sir?
Yeah. Expansion is very much on track. And by the end of this month, by the 31st January, we are making it operational fully. Actually, it is ready. Little formalities with the government is on. And by the end of this month, we are fully operational on that unit.
Okay, so the reason why this capacity has been set up, I would presume, is because you envisage higher demand which you are not able to fulfill from your current capacities, is it? What is the capacity utilization of your current capacity, and how soon do you expect the new capacity that you're setting up to reach optimum capacity utilization?
In the present capacity we have installed in Karnataka, we are looking for another expansion next year. So we, in just 2 years of time, we think that we will be able to utilize it. By 2020, I think we have to make another expansion, this thing. So there is no doubt about it. You see, for any company, the biggest asset is the consumer choice. Once your brand is accepted, once your quality is accepted, once your business model is accepted, then as we all know how big is the country and how big is the consumer base. So we have absolutely no doubt in performing better and better in the coming years.
Okay, so that's interesting. If I can just ask you one question on your capacities, Mr. Arora. If I'm not wrong, your current installed capacity for beer is about 59,200 kiloliter, and for Indian-made foreign liquor is 5,400. You're already setting up a new capacity in Karnataka, which will come on stream from Q4. I heard you mention 2 other capacity expansion plans, one in FY19 and one in FY20. Is my understanding correct?
Yeah. You're correct.
Okay. So let's talk about then what's the kind of growth rates that you envisage from your revenues, because you'll be setting up all of these capacities because you are seeing demand coming in. What is it you've had a fairly good Q2. What do you expect FY18 to be like, and what's the kind of growth rate that you believe Som can do over the course of the next 2 or 3 years with all of these capacities coming on stream?
You see, in this year, the growth rate is about 40% so far. But the current growth is about more than 50% in the current months, and the same kind of growth we are expecting in the next year. So this year we have done about 250, and we are closing at about 300 crores. And next year we are hoping to get more than 50% growth, 50 to 70% in between somewhere. We are hoping to have the growth next year.
Now, what are the triggers for these sales? Aside of the fact that you get acceptability for your brands, we also saw that you've got the canteen store department approvals, and all of that could be leading to sales as well. How big is this project for you?
Yeah. the All India Army, I am so happy to share with you that we have about 40% All India market share in the beer in the army armed forces. You see, whatever the beer is supplied, we are supplying about 40% of the this thing. The basic, as I said earlier, that the acceptance of the product, that is the biggest strength, and the we as an Indian company, we always believe that any Indian perception, any Indian will look value for money. So our endeavor has always been that you should be one up in the quality, one up in the pricing. So value for money is our mantra for our business.
Well, since you're talking acceptance, let me sneak in a question about the US markets as well. If I'm not wrong, some of your beer brands have been approved by the FDA. And unless I'm very wrong, your first trial order was dispatched in the month of November. What's the update thereof? And how large do you believe the US market could be for you? And what are the timelines thereof again?
I am happy to share with you that last month we had sent it, and this year the order has been doubled by the buyer. So we initial response has been very good, and we have been having they have doubled the quantity, and the way we are looking at it is going to be a big big business for us in US.
Size of this order that you mentioned, Mr. Arora, in the United States?
It's a just registered last month, and we had sent first class trial order last month, which has been received by them, and they have doubled the quantity. At this stage, when we have just begun the business there, the size is not big. We have only had the order of 4 containers, but we are hoping to make it very big in the coming year.
By very big, I mean, do you have any internal targets in mind, Mr. Arora?
You see, the US is one market which, you see, if the acceptance comes, then it is, you see, we can expect anything, say up to 100 containers.
Okay, fair call.
This is kind of business. You see, the market is such, if the fundamentals are right and the acceptance is there, then the market is huge. They are open to accept the good products from any part of the world. So that way, we are hopeful something big will come. And because it has just begun, so making any kind of numbers at this stage would not be right.
Fair call. Now, the other part that I wanted to talk about, Mr. Arora, with you are the costs. And there are two factors to this, cost and margins. Firstly, let's talk about the cost picture. As we learn, molasses costs have come off quite a bit across the chain. How big a benefit is it for you as a company?
As a group, this has no relevance directly with this company because we don't use this thing. But as a group, we have another company where we have the molasses-based very big unit. So molasses is a very large factor. This profitability has become very big because of the molasses prices.
Doesn't impact you in any way. Fair call. What about premiumization? Because as I learn, although it's a small part of your business, I think about 10% of your revenue comes in from Indian-made foreign liquor. But as we learn that there is premiumization and you are targeting premiumization in that Indian-made foreign liquor segment, what kind of margin enhancement that comes in as a result of that?
You see, we are focusing up to the upper middle class of the society in India. We are not targeting to the scotches and super premium range. We are very clear that 5 to 10% of the total sale, which is at the top layer, belongs to the multinational. But 90% of the business in India belongs to us. So we can do as much as we want. Fortunately, the Indian consumer is now open for the good quality, good packaging, and paying it the better pricing. So we are on to the premiumization as we did in beer. Similar exercise we are this thing, and one of the finest brand we are introducing in the coming months is a semi premium whiskey. which is the large, consumer base. The almost about the 40% of the total IMFL business belongs to this range. So we are introducing the product in the new financial year. So we are hoping it quite a. But the initial trials have already been done, and we are quite satisfied with that.
Okay, so where does this entire premiumization exercise take your margins to, Mr. Arora? The reason I ask this to you is, even in tough times, as I see, you maintain your margins very well. Unless I'm very wrong, your EBITDA margins have stayed around or northwards of 15% in the last few years. And please correct me if I'm wrong here. What is the outlook like? FY18, because Q2 you anyways had an uptick in margins, and can those improve with premiumization over FY19 and FY20?
Yes, you are right. We have been maintaining this thing because we have always maintained the balance in the selling and the overheads with the company. But due to the premiumization, the margins are definitely going to improve, and in the coming year, the top line and bottom line, I'm sure both are going to improve phenomenally.
I think you gave us some estimates about that, but I'm just wondering, are there any numbers to the EBITDA estimates that you have? I mean, from a 15% average that you've done in, can you go in to and reach the 20% odd mark over the next couple of years?
In IMFL, it is going to be around that only,
What
maybe
about beer?
18 to 20.
What about beer?
Beer is a volume game. We have sold last year till September 25 lakh cases. This year we have already done 40 lakh cases. So this thing, beer is a volume game, and this thing. So definitely the margin will improve from 15 and a half what we are having presently. It will definitely improve, but it will not be to the level of the IMFL. But because this the volume in the beer is much bigger than the IMFL, and IMFL is a quality and the game, and volume beer is the volume game.
You of course also hired some new marketing heads and some key positions being filled out there. So I'm guessing you have some plans out there. My final question to you, Mr. Arora, would be any kind of funding requirement that you would need to execute the expansion plans that you just mentioned?
You see, we have been a very financially disciplined company, and at this moment, we do not have any kind of this. We are a cash-rich surplus company, and all the expansions you will be happy to. This Karnataka plant, the investment is more than 165 crores, and we have not taken funding from any of the financial institution or anywhere. It is all internal accruals in this thing. So at this time, we are but we are going for an acquisition also before the close of this financial year. So this acquisition we may need some funding. So all the institutions they are more than happy and willing to come with us. So we have to just approach them and can assess to the requirements. There is no problem.
So you would probably tap the debt market as opposed to the equity markets for making this acquisition. And if you can give us some details, what could the size of this acquisition be?
Acquisition could be around 100 crore. This thing. So this is going to be a very boom for us, because one we are already operational by the end of this month, and this another acquisition will also bring almost another equal size of top line and bottom line. So I think this is going to be about 100 crore, maybe 10% plus and minus.
So it's a capacity that you're acquiring, or it's also a brand that you're acquiring, Mr. Arora?
No, it is the capacity. You see, as I said, brands we are already in place.
Sure.
It is because of the interstate taxation, you cannot move in all the areas like other consumer products because of the interstate taxation of all the state governments. You are not able to put through all the products all over India. So you have to be strategically placed as far as manufacturing is concerned. It is not that Karnataka, we cannot send the stocks from here, but sending stocks from here, one is the freight cost and another is the interstate taxation. That makes the whole thing unviable. So because of that policies of the states, we have to have the multiple manufacturing locations. So multiple manufacturing locations is always adding a lot of value, as Dr. Malia has done it in his case. In the this thing has made the company big and bigger. So I think that is the only model available for the Indian companies to prosper.
Fair call. Mr. Arora, we wish you all the best for your plans. Thank you so much for taking the time out and joining us today. And maybe talk to you post your results.
Thanks a lot. Thank you very
That's
much.
Som Distilleries with their expansion plans, a slew of, an acquisition and a slew of expansion plans. But this would be akin to almost all distillery brewery companies. All the liquor companies have done really well in the last 6 to 12 odd months.